CNBC-TV18, embarking on a quarter century of excellence.
CNBC-TV18 is embarking on its 25th year since inception, and we would like to thank all our viewers, all of you, for your trust, and we promise to live up to it. You're watching Markets Forward. I'm Reema Tendulkar. With me is Nigel. Hi, Nigel.
Well, hi, Reema. What a journey it's been, right? Almost 25 years. And in fact, spectacular. We're lucky to be here for more than half of that journey as well. But for the next 20 minutes, we've got you covered. All the big news, all the key developments on Dalal Street. And we'll also get you the events to track going ahead. Well, Reema, you go first. Run us through some key data points with regard to today's market action.
Well, today was just a session of consolidation, right? Markets paused. We've had 7 good days on the trot, but today, while we've ended in the red, we haven't given up too much ground. The Nifty ultimately ending just a shade above the 20,900 mark, down 36 points. The Sensex lower by 132 points, but from the dip of 20,850, there was some buying. I think the story today was in the broader market. Yeah. The mid-cap index outperformed, ending with a gain of 0.6%. The advanced decline ratio was firmly in favor of the gaining side. And week to date, the Nifty's rallied 3%. The mid-cap index has rallied 2.5%. And we'll talk about stocks, we'll get to the top 10 stocks. But I think the sector of the day was clearly power.
Yeah.
Tata Power, SJVN, NHPC, in the frontline pack, Power Grid, NTPC. What big moves in these stocks.
Well, that's right, Reema. In fact, the Nifty ended lower today, but for the second day running, the 20,850 mark was defended. Yesterday as well, we went around those levels and we bounced off there. Today as well, we ended 50 points above the 20,850. So I think that becomes a bit of a line in the sand. We were highlighting this earlier today. 20,830, 20,850. That's the crucial support zone for the day. The broader market party, though, does continue. If you're looking at select mid-cap names, you're looking at the number of stocks that are advancing in comparison to the number of stocks that are declining, or the mid-cap and the small-cap indices itself, they did much better than what the headline index did. This sector that wasn't so sweet today was the sugar space. There's a problem with regard to the diversion to ethanol, and that's why, in fact, you had stocks like Balrampur Chini that were down more than 5% in trade. But the power stocks, well, they were as strong as ever. Across the board, you had buying on those names. The sense you get is maybe, in fact, the markets want to go for a few days of consolidation, wait by to hear what the central bankers, both the Reserve Bank of India governor, as well as the US Fed Reserve Chair, what do they have to say in the next few sessions? And then, in fact, I expect the upward journey to continue. But a few days of consolidation doesn't hurt anyone. But I'll tell you what, let's get our guest on the show. And this is a special broadcast that we have since it's our birthday. Shilpa Rout of Prabhudas Lilladher joins us on the show. Hi, Shilpa. Thanks so much for joining in. Well, what do you make of today's trading action? The Nifty bank bounced off lower levels, but you also had the Nifty that defended lower levels. So on the headline index first, what are the levels?
Good afternoon, Nigel and Reema, and thank you for having me on the show. And congratulations on CNBC's 25th birthday.
Thank you.
Talking about indices, indices just refusing to show any sort of exhaustion. Today's move also, it would be sideways, keeping in mind that we have the RBI policy tomorrow. Otherwise, there's no sign of exhaustion yet. The Bank Nifty is having a very strong support at around 46,500. Today's low was also during around that zone. From there, we saw that pullback happening towards 46,800 to 900. Nifty also, we see that 20,800 to 700, we have a cluster of supports now, which is very beautifully playing out. So as long as we are holding 20,700 on immediate basis, we are good to see 21,200 levels. Likewise, Bank Nifty, if it holds this 46,500 zones, we will definitely see 47,800 to 48,000 zones.
Shilpa, thank you very much for joining in. We'll move on and get you some important market voices from top market experts through the day. We had a chat with Ramdev Agarwal, Samir Arora, S. Naren. Listen in to what they had to say.
At times it is scary to see at what pace market has moved from 20 to 21,000. It's been just few days, So I don't think we can maintain this pace. We need calibration. Otherwise, wrong things start happening, wrong kind of trades start happening. Wrong kind of money starts coming in. So I think we need a little breather. But I don't know what will happen in the short run in the market. Digital era is there. So we have companies which can grow very rapidly. So the complexion of top companies can change the way it has changed in US. I think there is a chance that here also we may find 30-40% growth for these kind of companies a new normal altogether. PSU basket were beaten down big time. I mean, they didn't. I mean, they wanted little lower valuation, but not so much lower. Like if the index is trading at 22p multiple, they got stuck in single digit, like 6, 7, 8p multiple. And some of them are large monopolies, very important part of the economy, like all the oil companies, your power grid, your some finance companies, and also they were all at, in fact, low single digit p multiples. Finally, when the market is taking off and other markets are at 25, 30 p multiples become normal, these companies must go up. And they are very important. And they were an important part of the infra build-up.
Every year, FIIs have bought because they also have growth in their AUM because of worldwide growth, some allocation from this sovereign, this, that, whatever. Now the question is whether it will be in full force. The reason for it being in full force might be because of their losing a lot of money and confidence in China. So if that reallocation happens, then the force becomes a real big force. Otherwise, anyway, they should be not net buyers, even in normal situations. Now the difference is there's a domestic buyer against it. So if both buy, then is where the fun starts, which is sort of we are all playing for. So we are betting that large cap financials will definitely perform in a big way because financials are otherwise doing well and their stocks have not gone up and they are a large part of the market. So even if the foreign investor wants to be underweight, overweight, if he's starting off a 30% weight, he could be 25 or he could be 20 or 35, but he still has to put in substantial absolute amount of dollars into these stocks. For the other two groups, which according to me are IT, Reliance is one, but if I talk otherwise, it's IT, consumer and financials, which are the three large groups or large companies. IT sector, according to me, is still doing quite badly. And therefore, I don't think they will get the same amount of interest from foreign investors as financial.
India is in a fantastic place, except that Indian valuations are completely different from the rest of the world.
Right.
If you look at it, that valuation expansion has continuously happened.
Right.
That's all. But otherwise, if you look at it just from the point of view of outlook, I think there is nothing to say that there's any better country than India.
Right.
All the other countries have serious challenges in one form or the other, whereas India doesn't have those challenges. The other message is clearly that you can't predict the top of this market because the top of this market will be determined by how much foreign flows come in 2024. It can't be predicted by local flows because local flows have been very good over the last 2 years. They've taken markets to where they are. Flows are yet to start. So if they come in a big way, you can have a much bigger move. So I think, at all-time high, all-time caution is required.
All right, well, we have Shilpa Rout, who's still with us. Shilpa, I want to ask you two stocks of the day. One was Paytm, that was lower, and Balrampur Chini as well. Both of them had some negative news flow, but it appears even fundamentally there was a bit of an overreaction on both these two stocks. Your view, technically, how are they looking?
Talking about Balrampur Chini, yes, 400, actually 380 zones to be more precise. It is a very good support zone. So if the stock is trading at around 400 now, one can attempt a long here again with a stop loss of 380. I believe that it should be again towards 425 to 440 zones. It was a reaction for the day. I believe tomorrow and onwards we might see the stock again stabilizing, but 380 to be a very strict stop loss. Talking about Paytm, if you look from the past 1 month also, we have seen a steady fall, and today it was really, a bloodbath for the stock. Talking about that, also 600 looks like a support from here. If it holds the zones, then, again, it can gradually move towards 800. But for now, Paytm to be avoided. Balrampur Chini can be attempted with 380 as a stop loss.
Thank you very much for that. The recent high on Paytm was 998.3. So it almost got to that 1,000 rupee mark. It hit that on the 20th of October 2023. And from that level, it's fallen all the way down to 668. About a 33% fall from that 52-week high of 998. Shilpa, thank you very much for joining in. Get into a break on the other side. We'll get you our popular segment, D Street Chatter, along with the top market events to watch out for. Stay tuned.
CNBC-TV18, embarking on a quarter-century of excellence. CNBC-TV18, embarking on a quarter-century of excellence.
Welcome back. You're tuned in to Markets Today. Well, it's time now for our special D Street Charter segment. Nimesh joins us to give us an insight into the dealing room action. Nimesh.
Hi, Nigel. It was a day of consolidation, but there was large moves in the broader markets. So the broader markets outperformed in today's trade. In terms of individual stocks, the first stock on my list today is IEX. That stock has gained massively and huge volumes as well. I understand some long-only funds seem to be quite active in the last many days, and that was it in today as well. So expect high delivery volumes in IEX. The second stock is IDFC First Bank. That stock was under pressure on the back of a large block. We all know that the seller was Warburg Pincus, so they've sold out. In terms of a buyer, I understand a long-only fund was a buyer in today's block, so disclosures will be important there. The third name is Shankara Buildcon. That stock, while it's been consolidating of late, that stock moved today on good volumes as well. I understand some HNI interest seems to be back in that particular stock, and hence a big move there. And the last one is BEL. That stock was buzzing on the back of a large order win, as well as a couple of upgrades as well from brokerages. So on back of that, BEL was buzzing and on good volumes as well.
Thank you. BEL up 2.7%, and the year-to-date rally is 60%. It's been buzzing since the start of the year. Nimesh, thank you very much for that. And before we wrap up, we bring you some key market events to keep an eye on and global cues to track ahead. Sonal.
Thank you for that. Well, a couple of them. The biggest one, of course, is the fact that we have the RBI policy meet outcome tomorrow. So all eyes on that. 10:30 a.m. is when we'll get the decision, and 12 p.m. is when the governor will address the media and take question and answers. So, of course, you have to tune into CNBC-TV18 for all those updates. There is a likely cabinet CEA meet as well at 6:30 p.m. tomorrow. So that will be important to track. In international economic data, we have GDP for Q3 coming in from Japan. There's trade balance for the month of October, all household spending in the month of October as well. For Germany, the final CPI print for the month of November will be out. And in US, non-farm payrolls for the month of November and unemployment rate for the month of November will be out tomorrow. In terms of stock-specific action, there's Investor Day for Utkar Small Finance Bank, and there's earnings from SpiceJet for Q2. So these are some of the names we'll be watching out for.
Okay, all right. Thanks a lot for that, Sonal. Well, with that, it's a wrap on this edition of Markets Forward. We leave you with some market opinion coming in from Prashad Khemka of White Oak Capital Management and James Sullivan of JP Morgan.
Low double-digit returns are reasonable expectations. That's what the market has provided over the last 20, 30 years. And that's very good return. In today's day and age, if you can get low double-digit returns for where the inflation is, where the interest rates are, and where the tax rates are, 10-11% from the market is very solid return, and that's what I meant. And that's compared to the projected earnings growth, it's somewhat lower. So I do expect that market is expecting a mid to high teens earnings growth.
JP Morgan is overweight India looking forward into 24. The backdrop for that is a combination of growth, which we've talked about on prior programs, but also recognition that India is running the highest corporate ROE out of any country in Asia right now. We do see opportunity in the large cap space, particularly in the financials and some of the consumer names. So we do see the potential for the market continue to roll from here.
I think if you just step back and think of the RBI action, I think people have focused a lot more on the negative hit on the capital adequacy ratios, or the negative hit on the cost of funds for some of these NBFCs who are more exposed to that retail segment. But I think on the positive side, what people I've not heard talk so much about, this is something that reduces the risk in the system. That was one of the risks we as investors and a lot of other investors were worried about, and would constantly ask managements about, how they're addressing, how they're handling this potential risk that is building up. So RBI has taken a proactive step.
So in the last 20 years, for example, the total investments in this country have been about $9 trillion. Of this number, about $5 trillion have been done by the corporate sector, $4 trillion by the government. The government funds it with taxes and borrowings. The private corporate sector funds it with the capital markets and its own profits, and the capital markets in a broader sense, both equity and debt markets. So you cannot get growth because the capital markets fund investments. This is very simplistic. Now, out of that $5 trillion, about half a trillion dollars have been directly raised from the stock markets. And it forms the anchor to all borrowings and investments that corporate India does. So this is one. The second aspect, which I think is less understood and is less appreciated, is the impact on wealth. While entrepreneurs go about creating wealth by starting businesses, the common man on the street has only one source of creating wealth, which is the equity markets. And thankfully, the common man on the street in India has now learned it over the last 10, 15 years, especially over the last 8 or 9 years. And you can see that in the flows. But the impact of that wealth comes directly on consumption. And then you basically get better growth. So there's a virtuous cycle that a buoyant and a functioning capital market creates, which goes from investments to consumption back into investments. So its role in the economy, Shireen, is hardly to be underestimated. It's, in fact, one of the most important agents of economic development.
One of the most important agents of economic development is the capital market, and you should not, it would be at your peril that you underestimate the significance of that. But Lilladher, if I could just build on the wealth creation impact that you spoke of, as well as the investment impact that you spoke of. If we look at the trajectory that we've covered so far in terms of earnings growth, as well as what that's finally meant as far as, the market growth is concerned. From here now to 2030 or 2047, which is what we're expected to forecast for today, what's the expectation? What kind of earnings growth are we talking about, and what kind of investment growth will that fuel?
So I think broadly speaking, for every unit of growth, India needs currently about 4 units of capital. So you can do the math depending on what growth rate the country achieves. But the back of the envelope calculation is that we need about 6.5–7% growth to employ the 10 to 15 million people that will join the workforce every year. So that's the type of growth rate you need, and therefore you need about 28 percentage points of GDP as capital to generate that. Now, of course, our capital efficiency will improve, so the amount of capital needed will decline in time, but that's approximately the calculation. And I think the stock market, for example, will be a very important ingredient to this, because without that private risk capital, we will not be able to generate this growth. And I think one of the most important policy changes that we have put in place, and this happened in 2015, when the government let retirement funds buy stocks. Now, such a change had happened in the US in 1980, when 401k plans were allowed to buy stocks. And what it seeded was an unprecedented shift in the household portfolio towards equities. And we are seeing the same thing today in India. So the seeds have been sown for households to actually come and participate in this growth story, which was not happening before. Households in India were more inclined to buying gold. Gold is okay as a store of value, but it doesn't have any productivity. And this transition, I think, really creates the upside surprise that India can generate. It would not have happened otherwise.